We take you to Wall Street, where the big news is the Dow's resurgence. The Dow Jones Industrial Average shot up to 9,000 yesterday, which is the highest level since January. Early show national correspondent Jeff Glor is at the New York Stock Exchange. I bet they're doing that dance, that wedding dance there, Jeff.
Maybe later, and we'll join in. Hey, Maggie, good morning to you. One thing to note about this uptick is that it's broad-based. It's not just one sector. So we're talking about energy here, communications, healthcare companies, most of them doing better. Thursday's rally was just the latest wave in a two-week-long surge on Wall Street.
Taking us back to 9,000 provides a shot at moving above that.
The most recent move up was prompted by better than expected earnings at some of the country's biggest companies, Ford, AT&T, and eBay, and better than expected existing home sales, up 3.6% in June. Which means going back to March 9th this year, the Dow is now up 39%, the S&P 44%, and the NASDAQ 56%.
This ratifies the idea that the recession is winding down, that investors now see it in the corporate earnings numbers and the economic data, that in fact the recession, which has been ongoing for more than a year and a half, is just about over.
That said, many of the people we talk to down here remind us that this is still a fragile market. The economy has been through a lot, and there have been some poor earnings reports late yesterday, Microsoft and American Express included. So, Maggie, yes, maybe some dancing, but some subdued dancing down here.
Cautious optimism, Jeff
Yes.
Glor. Thanks so much. So what do traders think? Is the economy on its way back, or is this just another loop in the roller coaster? Trader Doreen Mogavero joins us from the New York Stock Exchange with some thoughts on what all this means. Good morning, Doreen.
Good morning, Maggie. How are you?
I'm well, thank you.
Good. I'm not dancing yet.
Not yet.
I'll let you know.
and why not? Why the cautious optimism?
No, well, I mean, I think that definitely the market is getting a lot of confidence back into it. People are really sort of shrugging off the bad news. Even you see the European markets this morning and the Asian markets following suit from us yesterday, regardless of the earnings that may have come out last night. So I think that people really want to see this market go higher. I think they have faith in the things that the government is doing to keep us going forward. But yet I still think there are things like economic data, the jobless claims,
right,
and housing numbers that people are still watching very closely.
Exactly. It may be hard for somebody at home who lost their job to be celebrating this rally on Wall Street. In fact, just this week, 554,000 people filed jobless claims. And to put that in perspective, in a healthy economy, 300 to 350,000 is the typical jobless claim that you see in a week. So how do you bridge that disconnect that so often exists between Wall Street and Main Street?
Well, I think you have to understand, too, in a great part, the stock market is a predictor of how things are going to be going forward, not necessarily how they are now. And I think that's where sometimes we get a little bit confused. I think people are feeling optimistic that, yes, we are in a recession, but we may be at the tail end of that recession, and that quite soon, if not the first quarter of 2010, we'll be starting to see the effects of that on Main Street as well as in the stock market.
Right. We sure hope so. Doreen Mogavero, thank you.